everybody, this is Dave Poxon from the Index Strategist. This video is an overview video of how to understand the Algo Trader chart setup, which is a chart setup that we use quite a bit in our analytics when we're referencing different aspects, and we tend to update this quite a bit. I find it a really great tool to give us sort of a longer term picture of what's going on in the market. Unlike a lot of the portfolio concepts where we rely a lot on the algorithms in terms of our buy and sell, this process is really designed to give us an overall trend. We're not looking to fine tune anything. We're just trying to get a good sense as to sort of what the trend level is within a particular ETF or stock. And more importantly, are there signs that the trend is about to reverse? We're typically looking for a trend on the short end of 4 to 6 months, and sometimes these trends will last, a year, year and a half, possibly even two, just depending on what's happening within the market or the ETF that we're tracking. So the video is going to focus on explaining what the overall process is. Then we're going to talk about the different components within each of the charts that you see in front of you. And then we're going to try and put together several examples so you'll be able to understand and reference back. We also have a shorter guide in written format that's on the website that you can reference back to that as well. So starting with the whole concept of the Algo Trend setup is you can see in front of you that we have three different charts. And whenever we analyze anything, we're always pulling up all these three charts, and you'll understand why in a minute. But basically, each of the charts tends to have a similar component. The one on the right has a few extra pieces of analytic, which we'll discuss in a minute. But basically, each chart has the same components in the first three levels, and that is that at the top, you'll see that this is the price chart. So this in the green is just the price of the ETF or stock that's being analyzed. And then you'll notice that there's an algorithm in here. These are the algorithms are what make the buy and sell decisions. They're the rules-based approach. At the top, you can see that this particular algorithm is red in short. So this is our bearish system. Okay. What we also have on this system is we have a bullish system. But before we jump into the systems, I'm just going to go through the algorithms. Also have what we call an algo trend point system. So this is a point system that basically goes between plus and minus 5. Anything above 2 tends to be bullish. Anything between minus 2 and plus 2 is what I would term to be neutral. And then anything below minus 2 is bearish. And we reference the point system quite a bit when we're talking about trend and relative trend of certain areas, and also looking at different aspects of the trend, whether the trend is negative and increasing. The other main component that we'll see is the D2 analytic process charts in here. This is the equity curve analytics. We have a whole separate series of videos on the D2 process. It's probably the most important piece of analytics that we run along with our algorithms, but it's very important in how we sort of use these D2 analytics within the trend. So you can see that each chart basically has the same process, which is an algorithmic trading system on price. We have a point system, and we also have the D2 process. Okay, so as I was going to mention as I mentioned previously, what we also have is we have different types of trading systems. And these trading systems are what I reference are called biased trading systems. And what we mean by biased trading systems is essentially we're looking for trading systems that are going to perform when the market's working a certain type of way, that they are biased towards a certain type of trend. So in this particular case, on the top, what we have is a system that goes short the market, which means that it sells short and flattens out its trade. This system at the top does not go long at all. So this type of trading system is a type of model that will only work when the market is not performing very well, or the ETF price is not performing very well. So you can see where I've got my cursor hovered right here on this the S&P Energy ETF, that the equity curve, which is the sum of all the profit of the trading system, is rising, so that the trading system is actually making money in this period here, which happens to also be a period where the price is falling. Okay, so the top is what we were often referred to as the bear chart, because it's biased towards the bear. Um, the chart below that is what we call the bull chop chart, and again, it's the same concept that when there's negative, or pardon me, positive price action, this particular chart, or this particular trading system, tends to make money. So you can see again, when using the same period that we used above, you can see that there's a general drop in this period here, because a bullish trading system will not necessarily be profitable in a downward sloping environment, whereas when the market starts to go into an upward sloping environment, you can see that this particular trading system is making money, whereas the one above it is actually going through periods where it's just the equity curve is falling and it's not making money. Okay, the third chart is called it's also a long only, so it doesn't go short the market, but it's a bullish market. It's a bullish trend chart, and it's very different than this particular market chart, because both the bear trend and the bull trend charts that you see on the left hand side are also what are called, they have a bias towards chop. So they like to get into the market and get out of the market relatively quickly. And so there'll be periods, as an example, you can see right here, where this particular trading system got in right here and got out, and there wasn't enough chop in the market for a trade opportunity to occur for almost 4 or 5 months. Whereas this particular trading system tends to look for the opportunity to get into a trade and stay into that particular trade for quite a long time, until the trend is actually reversing. And so you can see that just as this one missed a lot of this uptrend, this particular trading system works this way. This, of all the trading systems, the bull biased uh, system that's trend oriented, the one that we're focusing on right now, tends to be the most important for a lot of different aspects, but primarily because this particular system will always be looking to jump into a particular trend. And it tends to be pretty accurate in the sense that, what we're seeing is we're seeing a trend that's rising right here, beginning to break down. And as you understand a little bit more about the D2 analytic process, you'll be able to see that the trend is beginning to break down up in here, and that there's a bit of a reversal sign happening. Now, the goal of this particular program is really to kind of use all three pieces of information together, so that we don't just necessarily rely on one piece of charting information. We tend to use all three pieces together. Now, the reason why we want to use all three systems together is because we want to kind of understand the type of environment where we are. Not necessarily every system is going to get the trend necessarily right, but what I find is that as I'm comparing the different trend models and the different algos within this three system setup, that I tend to get a much better idea. So, if we look at this particular case, and using the example that I just pointed out, we'll see that this particular system here is showing in the D2 process that we're above the yellow line, and we're also above the major on-off lines in D2. And again, if you need more information on the D2 process, you can look at the D2 videos. But basically, this usually when you're moving above the D2 values, this is the start of new trends that begin to occur. And what we'll notice here is that in this particular case, the trading system catches a very long trend. What's also interesting to notice is that you get a bit more of a confirmation. And one of the really interesting and cool concepts of this whole D2 process is, when you bias trading systems towards a certain environment, you tend to have negative behavior that also can confirm your trend. And what I mean by that is that when the market turns into a a long upward trend, the bear bias system tends to be excellent, almost in reverse, so that just as this particular system here was, showing some positive growth in we're seeing some signs that the market's moving up. We're also getting the same readings over here in this particular chart, where what we're seeing right here is that the equity curve is falling, and so we don't really have anything that's confirming that information other than we're above a major trend line, or pardon me, the major on-off line of the trading system right in this particular area right in here. So, and again, the idea for the D2 process is really to give investors this idea as to when potentially trends might be coming to an end on more of a major scale as opposed to sort of a micro scale. So what we see right here is we see that, the at the bottom here, and if I can change the setup here so we can kind of see each position, with the cursor on each of these markets, you're still seeing that the trend on the chop models are making money into this area here. But what's happening is that you're also moving into an environment where we've gone from a pretty strong bullish trend now to a trend that both the bear system, which is choppy, is above its yellow line right in this area, along with the bull system, which is kind of wavering back and forth across its different lines. And this is one of the big differences between the Algo Trend process and the way that we use the D2 process for our portfolio picks and our different ideas that we want to purchase, because we're not overly concerned about crosses. What we're generally concerned about is the overall trend direction of securities or ETFs, and is there change that's happening. And so what's really interesting to notice is that even before, or just as the equity market, pardon, in this particular case, the energy spider began to top, you can see that the negative system was starting to show life, and so positive. And usually that's the first key. At the same time, you're noticing that the bull system, that is the trend-oriented system, which is not going to perform well in periods where the market's chopping up and down or negative, is begin to cross below its particular line. Okay, but it's not unusual to see periods where you're going to get a bear system that's going to do really well at the same time the chop system is going to go well. And it's only when the trend begins to really break down and you see negativity that you see both. At this particular point, you've seen this trend breaking down, telling us that the likelihood is pretty strong that we're about to see some downside, and then you're getting some confirmation from the bear side as well. And again, these are trends that last quite a while. In this particular case, you're talking about a 6-month trend, pardon me, even longer than 6 months, where you've got negativity in the market. You have a lot of chop going up and down, and it's only when you start to see small reversals that occur. So the other aspect that you can look at from your points perspective is you can also see that the points value, even up here, well, before you have major crosses, the point value is still green, but you'll notice that there's been a rapid deterioration in the point value. So as we get crosses over the negative side of the D2 curve lines, you'll see that in fact we're getting breakdown in our trend. And so one of the things that's important to look at from the point system when you're looking at the point value of your chart is what's also is the trend. Is it continuing to be negative? Is there any particular change? Because often what you'll notice is that as you start breaking above the different D2 lines, in the case of the cyan or the very light blue line, you'll see that's the first one, and it tends to be something that is a good leading indicator, but also could not necessarily so. The other aspect that we want to look at is that there'll be trends that will exist inside major negative trends. So in this particular case here, we'll notice here that on this bull system that the very top of the market was here, the system broke down, but there was also an opportunity where the system came here and actually started showing that it was positive. But what you'll notice is that you had a pretty long run I'm tracing along the long-term on-off line here in the D2. So from here to here is also sort of this major point within, the markets where, there isn't a whole lot of up and down in this general. The from here to here, the price hasn't moved a whole lot. So you've had a bit of a flat trend. Uh, and within that particular flat trend, you've had periods where you've gone up and down. And so during those periods, this is similar type of look from the bear system as well. You can see at this point here, you've got more of a flat trend. And it's only when you start seeing major shifts in the trend at this particular point is a really good example that you see that the bear system comes below its major on-off line. So this is it, the dashed line that switches back and forth between green and red. You see that this particular system is reversing to the downside, and you can see that the bear system, pardon me, the bull system at the bottom is reversing to the upside. So again, when you're looking at this in the different reports, what we're trying to do is we're trying to get an overall sense as to what the trend is. Where are we above the different trend lines? Not necessarily worrying about minor crosses, unless, of course, they happen when there's a significant change or the trend has been moving for a long time. And so when I reference a lot of this information in our different reports, what you want to be able to do is look for each one of these particular charts, even if we don't talk about it, be able to understand, where the trend value rating is coming from.